Don't worry about how or where you begin. As long as you keep moving, your success will be far from where you start. Kevin Kelly. My friends, I don't care how you come to us. If you have a PhD in economics, you don't have a high school diploma. Some of the best traders and investors I know are folks with just a high school degree, people who are dedicated and know where they are going. The world turns aside to the man or woman who knows where he or she is going. And if you want to be a market master, if you want to be able to read these charts, it takes dedication. 10 to 15 minutes is all we are asking a day. It's not 3 hours on a Saturday. It's not 2 hours at night on a Wednesday. It is 10 to 15 minutes every day following these charts, practice trading, doing all the stuff we teach. I'm going to include it at the end of today's video, all 3 of the training videos on how to fill out the trade worksheet, daily market worksheet, and weekly market worksheet. It's the weekly market worksheet you should be filling out now because, of course, we are doing the comprehensive review and forecast. Remember, markets in the U.S. are closed on Monday, so this show will be tagged for Tuesday. Again, there is no market opening on Monday. We will be tagged for Tuesday, the 1st of June. It's Memorial Day. Congratulations to all my fellow veterans for all you've done for our great country. Let's jump into these charts. We see stocks are up for the day, bonds down, gold up, Bitcoin hammering down. Again, still have that overlay and that power pushing Bitcoin down. We'll get to it in a minute. Start with the S&P. Green up candle for the week. Now, I just want you to look at the overlay that we see here. What do we see when we back off at the end of the week and check out what's happening with the S&P? We had that weekly vertical crossover, didn't we? The week ending the 21st of May. But this week, even though the price percent oscillator is still pulling away from the red signal line, derivative oscillators losing momentum, still positive. We have a green up candle and we have up movement. The high for the week, 421.25. What did it look like back on 5/7? 422.82. So in fact, we have hit higher highs as recently as, 3 weeks ago, 4 weeks ago? So what's going on? Well, there is, you can see by the price percent oscillator and the derivative oscillator losing energy, there are forces pushing down on the market, really putting pressure on it getting higher. Look at this 2-day chart. We have 6 days of up movement, but even with those 6 days of up movement, not reaching the high that was reached back on Monday, that's the Friday, Monday, what would that be, the 7th and the 10th of May, and market dropped after that, slid sideways and then up for 6 days, but not enough to cause a crossover on the price percent oscillator. Still that negative overhang. Derivative oscillators negative, losing downward momentum. It's not positive. Look at what's happening on the half day. Things have edged. They popped up for a while, sort of sideways and tracking up a little more. Price percent oscillators flat. Derivative oscillators been losing momentum since it peaked back on Tuesday morning, the 25th. So again, we've got lots of downward pressure. At some point, it appears this is going to break. That's what I'm thinking. That's what I'm seeing. Now, can I be wrong? Of course, it's not broken yet. But I'm sure looking for that. I'm looking to see if and when that occurs, and I feel like it is coming. But you know what feelings are worth? Nothing. I'm going to let these charts lead me. Let's look at the Qs. What's going on there? Qs had a weekly vertical crossover going down back on the week ending the 7th of May. Then down 2 weeks, nice, down, and then this last week trying to pop up. But price percent oscillator still going down, shaved off some of that downward momentum, but still going down. Derivative oscillator gaining downward momentum. 2-day chart, we see 6 days of up movement, still not quite enough to cross over. Derivative oscillator did cross over, but the price percent oscillator close, but no cigar at this point. It's going to be interesting to see what goes on this next week. Is the market going to get renewed vigor and just start hammering up. In fact, that'd be okay if the weekly stays down, because this would make decisions a lot easier if we had a 2-day recross going up. Then when it did hammer over going down, if the weekly were still in a down move, that'd be a beautiful entry point, wouldn't it? We'll see. We'll watch, wait, and see. What about the half day? Now again, we can see where the price percent oscillator is a little less than flat, derivative oscillator losing momentum. So again, up in the morning, peeling back a little bit of that gain in the afternoon, and not up much at all. But again, it's a slow Friday, of course, before a big holiday weekend. So we'll watch, see what this next week has for us. You know what the market could be doing, though? It could just be biding its time, gaining some energy, and getting ready to pop. Don't know, but this next week is going to tell us a lot, I do believe. Let's look at 20-year bonds. We see that the price percent oscillator continues to pull away from the red signal line even after the prior 2 weeks of down movement. This week, little green up candle with a wick on top. We'll continue to watch as the price percent oscillator pulls away from the red signal line. Derivative oscillator green, but losing some momentum. What's interesting is what usually happens when stocks are soaring. Bonds go down. When bonds are soaring, that typically means stocks are going down or getting ready to go down. Why? Because that's where money's fleeing. Is that what's about to happen? Don't know. Just positing that for you to consider. Look at the 2-day chart. Derivative oscillator gaining upward momentum. Price percent oscillator is moving up, but not at the speed it was prior to this latest 2-day candle. Red open box, a slowdown in the up movement. Go to the half day. What do we see there? We see where things peaked back on the morning of Wednesday the 26th, and then dropping off and sort of sideways for the last day and a half. Price percent oscillator positive, heading down. Derivative oscillator flipped over at the end of the day to negative. So we'll watch, see how things go after the holiday. What about gold? I'm loving it. Gold up today. Not much, 0.33%, but hey man, it's beautiful. What was our jumping in point on gold? Somewhere around the 166.59 mark. What is our high during the week? 178.61. Did you set your profit and loss bands? Have you cashed out a part of your practice position, part of your trade? Did you set up so much percent, sell half or a third? Don't know how you did that, but it's important to make sure you think about it and do it right. Special training for our subscribers today is exactly about that. Have a plan before pulling the trigger. If you're a subscriber, you're going to see that in your show notes. Listen to it over the weekend, absorb it, enjoy it, take some notes, learn from it. If you're not a subscriber, you're not getting the daily trainings. You know what it costs to subscribe? $0. So go ahead and do that. So gold moving up nicely, price percent oscillator heading up, derivative oscillator heading up, nice green up candle, higher high. Look at the 2-day, latest 2-day candle not reaching a higher high. That high happened earlier in the week between Tuesday and Wednesday. We can see that more when we get to the half-day chart. But again, price moving right up that trend line, price percent oscillator, derivative oscillator. Looks like it lost a little bit on this latest one, but see, it didn't hit a higher high. So things are still looking good on gold. What's happening with this half day? Well, we can see where things popped up and slid sideways. What happens to the price percent oscillator when you're not having nice, solid moves? It gets sloppy, doesn't it? When you start seeing the charts track sideways, move up, track sideways and down, what happens? Your price percent oscillator, which is what? It is a percentage version of the MACD, the moving average convergence divergence indicator. Convergence and divergence, you need lots of that to be able to get a good indicator that works. It's getting sloppy on this half-day chart at this point. Good news is moving up that 2-day trend line above the, moving up the half-day trend line above the 2-day and the weekly. So again, watch your price points. Hopefully you set those. You're taking profits where it makes sense. That's where we are on our 4 big charts. Lastly, we go to Bitcoin, down for the day, 8.13%. Look at that price percent oscillator spiking over, going down, derivative oscillator, just gaining more and more downward momentum. 2-day, Again, when we look, we can see things have not gone below this low of 36,543.62, which was reached back on Thursday, the 20th of May. But again, things are just sort of hanging around there. Is that going to be the low? Is this what Bitcoin's going to bounce off of? That would be beautiful, wouldn't it? But what are we seeing right now? Price percent oscillator still going down, derivative oscillator going down, and the half-day chart, which popped over going up back on Wednesday of this week, peaked on Thursday and then hammering down on Friday. So we'll continue to watch Bitcoin. Gotta wait, my friends, for all this negative energy to get out of it. And when it starts to take off again, what will you see happen first? Most likely that 2-day crossover going up, followed by the weekly. You want to know how good the weekly did for you last time when it crossed over going up? Check it out. Your buying point for a practice trade would have been the $12,137 mark. And where did Bitcoin peak? Before our chart crossed over, and you wouldn't stay in that long, but where it crossed over is at the 57,000, well, the high of 59,000. So that's pretty decent, isn't it? Yeah, that's pretty decent. That's where we are, folks, as we end the day. These charts are beautiful, and all it takes for you to become a master is to spend 10 to 15 minutes each day, every day. Buy our book. They're available. Look at the link in the show notes. Don't forget, Patreon members, this Wednesday, live question and answer call-in session. Get your questions in. Get the stocks and ETFs you want us to help you backtrack for practice trading. We look forward to seeing you guys then. And for the rest of you, we'll be back at the close of the market on Tuesday. Have a great Memorial Day weekend for all of our American friends, all of our friends overseas. God bless you all. From the whole team at Charting Wealth World Headquarters.